Good afternoon and welcome to our Fintech Circle webinar focused on insurance. All fintech companies know how important insurance is nowadays, from D&O insurance policies to cybersecurity insurance policies. And we wanted to cater for the whole fintech sector. So both of you who are startups today who joined us, but also for the scale-ups in the room, to really dedicate one webinar to guide you through an insurance health check. So what are the things you need to worry about? What are the things you need to analyze to make sure that you're fully insured? And also not just for your own management team, but also for investors. So that's a key topic for today's webinar. And as a speaker, we chose one of the fintech and insurtech experts in the insurance sector, Eloise Morgan. And Eloise is the Director of Financial Services at Paragon. So if I can ask Eloise to join me on stage, and we will start the webinar today. And we make it. Hello, Eloise. How are you?
Hello, I'm very well, thank you. How are you?
Yes, very well. Thanks very much for joining us today, Eloise. And we've got, we've got our whole team with us, obviously, today, and we want to make it very interactive. So for our audience, we will make it very interactive. So you've got the opportunity to ask questions while we have got the webinar during the sessions. You can just do that on the top right corner of your screen where you see the Q&A function. So you can just type in your questions. We can see them while they come through. And so you can post them here, and we will come back to them after Eloise has completed her presentation. So we want to really respond to all your also personal questions for the startups you're running. So with that said, I will looking forward now to hand over Eloise for your update, and really looking forward to learn, what insurance and fintech companies need to have in place to be super prepared. So thanks, Eloise, and handing over to you, please.
Great, thank you very much, Suzanne. Right, so hopefully everybody can see my screen now. So yes, today really it's just a bit of a time to talk through, as Suzanne mentioned, what things do you need to have legally, what things are your investors going to be looking for, and what things just should you have. I appreciate that people are at different stages, so it will be different for every company and each type of business. But hopefully this is going to give you a bit of a whistle-stop tour and overview of some of those things to consider. Just to make clear, it's an insurance health check. I have no medical qualifications whatsoever, but I am qualified to talk to you about insurance. I've been in the industry for 17 years, and you sort of primarily started off working on the investor side. So acting for kind of different types of fund managers, investors, to advise them on their own insurances, which I still do. But that sort of evolved into helping them review their portfolio companies' insurances. So it's given me a really good grounding to be able to talk to entrepreneurs and scale-up startups about sort of what the investors are going to be looking for. So I pretty much split my time now working on both sides. And fintech has been a real interest to me. I've got quite heavily involved in a lot of different fintech companies over the last few years. So hopefully that gives you an understanding of the fact that I do know what I'm talking about. But I shall leave you to be the judge of that after this is over. So we're just going to sort of talk you through, as I say today, just some of the key things. Now, I'm very well aware that building a successful business takes a lot of time, it takes a lot of energy, and with so many things to focus on, it can be really easy to overlook insurance. I'm probably guilty of it in my own personal life when it comes to things like home and car insurance, so I can relate. But when it comes to your business, it's really important to make sure that you are aware of what covers out there and what you should be having. Appreciate again that capital is often limited, so you don't necessarily have to have everything in one go. So that's again what we're going to be touching on today, as to what you should have and when you should have it. So let's talk first of all about everybody's kind of start of their journey to eventual world domination, which is incorporating the business. And the only insurance that you're required legally to have for most companies at this stage is employer's liability. Now, this is basically insurance to protect any employees that you have, in respect of if you are negligent as an employer and it leads to them suffering some sort of injury. Now, you might not have any employees at the stage that you incorporate, but if you are registering a company's house with more than one director, then you are required by law to have this cover, which a lot of people don't realise. And if you fail to do so, you could be fined by the Health and Safety Executive up to £2,500 a day if you're caught. So that's kind of the only real thing that legally you need to have. There are some exceptions, but that applies more to solicitors and people like that. So probably not as relevant today. Before we move on to the next part, I guess I just wanted to mention the fact that whilst things are legal requirements, whilst things are perhaps regulatory requirements, I kind of want to hopefully show you today that insurance shouldn't just be a box ticking exercise. It can be a really useful tool to help you manage your sort of business risks and allow you to transfer some of those so that you can actually focus your time, your capital, and all your energy on actually growing your business, rather than having to keep that sort of time and money aside when things could have quite easily have been covered under an insurance policy. And I understand.
I wanted to say, Eloise, just because you just made this very good comment that this is a legal requirement, and the poll which people just responded to showed that 50% of the companies who are currently with us have got some sort of insurance in place, but the other 50% do not.
Okay.
And so that's an important point you said. So anybody who's got at least one director needs to have at least the employer insurance policy because it's a legal requirement. So that's important, for those companies who responded no to this first poll, that it's a legal requirement to have at least employer's liability as soon as you've got one director on company's house.
Yes, that's right. So it depends on how it's all structured, but yeah, I would say generally if you are registering on that basis, then certainly check. These policies are pretty easy to arrange. They're generally better off being part of what we call a kind of office package policy, where you insure perhaps any laptops, etc., that the business owns. You also get some third-party liability cover on there, and that's actually a much cheaper way to arrange the insurance than if you were to just do employer's liability in isolation. So something worth knowing. But yes, thank you for that. So yeah, I mean, look, you're going to be familiar with risk if you are starting your own company. It kind of comes with the territory, but I guess, insurance is there to help you should the worst happen, because in life, things can always go wrong. I would hazard a guess that most of you put locks on your front doors and you take all precautions to try and protect your own personal property, but you probably still buy insurance just in case the worst happens. And that's really how you should see it with your business as well. So if we move on from what's legally required, and let's talk about what most investors are going to ask you to have. It does vary from, investor to investor, but in my experience, directors and officers liability and key person insurance are the main two things that they will insist on you having as part of a fundraise. So if we talk first of all about directors and officers, or D&O, sometimes called management liability, we like to give lots of different names to things in insurance just to make it more confusing for everybody. You may have come across this before. And look, whilst being a director of your own company is obviously very exciting, with great power comes great responsibility, and a lot of it. So you're now subject to numerous regulations, legislations. You could find yourself under scrutiny from investors, from employees, authorities, regulators, even customers, all of whom can bring actions against you personally. And if that wasn't scary enough, although the company has a limited financial liability, as a director, if you are accused of being negligent in your role, your own personal liability is unlimited, which means that your personal assets, your estate, are exposed. And this is exactly why investors will typically ask you to have this D&O cover in place, because it gives financial protection if directors are held to be personally liable and face any allegations of a breach of duty, neglect, misstatements, or just simply mistakes. Policies provide cover for defence costs in the event that you want to defend such allegations, as well as damages or settlements that may be awarded against you. And far from covering just directors, policies typically extend to include management staff, shadow and non-executive directors. Now, the other thing mentioned here is key person. It's not the most cheery of topics for a Thursday afternoon, so I do apologise, but it's basically life and critical illness insurance, where the company itself is a beneficiary, to protect against a financial loss in the event that a key person either passes away or receives a critical illness diagnosis. Now, investors generally insist upon this, particularly for startups and scale-ups, because it's at that stage where there tend to be individuals who will have a real vital role in the financial success of that company. Now, I've seen it many times before where the terms of the fundraise can mean the deal cannot be closed until these insurances are in place. So it's always better to be prepared and try and secure coverage in advance so that you can avoid any delays to securing that precious investment. So I appreciate we have a pretty diverse audience here today in terms of types of companies and stages, but if any of you are looking to get regulated by the FCA, I just want to touch on what you should have as part of this. Now, this isn't a compliance webinar, and I am not a compliance consultant, so we're not going to delve into the regulatory handbook, you'll be pleased to know. The short answer to the question of what you need to have is that it really depends on what permissions that it is you're applying for. So if you're a payment institution, an e-money institution, or an AIPS or a PISP, you're going to need to have cover that meet the guidelines of the European Banking Authority that are incorporated within the Payment Service Regulations, or PSD2. So PSD2 demands that AISPs and PISPs hold professional indemnity insurance. And if you are caught under that regime, then there is a minimum amount of cover that you are bound to have as a regulatory requirement. And that's derived from a formula that the EBA have put together.
I just wanted to add, Eloise, 50% of our guests today are regulated.
Okay, excellent, thank you. The polls are working their magic here, fantastic. Well, I'm glad that this is relevant to half of you. For the other half, I'm sorry, but I'll come on to why it probably is still relevant for you anyway. Now, if you are caught under PSD2, as I say, there's certain limits that you have to have. Also have to have an element of crime coverage within there. And currently, there's only a very small minority of insurers here in the UK that are able to provide coverage that is compliant with those requirements. The policy wordings themselves have to actually be signed off by the FCA. So it's really important to make sure that if you are caught under that piece of regulation, that you have the right cover. Now, even if you're not required to be regulated, so 50% of you today, I would still strongly recommend that you take out professional indemnity insurance. Whether you're not regulated, whether you're not required to be regulated by PSD2, but perhaps other permissions, because it's basically professional negligence cover. So if you make any sort of mistake in your business, whether that's to do with the financial services side or the technology side of your business, it covers you for defending yourselves, it covers you for damages and settlements that may be awarded. And as a fintech business, you have two areas to consider, as I've sort of briefly touched on there. Any issues that might arise out of your regulated activities, if applicable. And if you're perhaps more on the tech side, you have that exposure as well. And I will come on to that in a little bit more detail in a few moments. Now, you might be asked to evidence in place that you have PI insurance in place as part of any FCA application, but it's just important to bear in mind here that you can get quotations as part of that process, but most insurers will not actually bind the policy coverage until you've had your regulatory status approved. And quotations are typically only valid for 30 days, so it's important just to keep your insurer, your broker engaged and updated as you go through that process. Now, some of you might have or be thinking about becoming an appointed representative of a principal firm as opposed to becoming directly authorised to save some time and costs at the initial stage. Now, you'll probably find, if you are going down that route, that your principal firm is going to insist on you having your own professional indemnity insurance in place. There's a bit of heat from the regulator on principal firms at the moment. They're reviewing the appointed representative regime. There's a consultation paper out at the moment, but we're expecting principal firms to want to pass that exposure down to their ARs. And finally, on the regulation piece, if you haven't got directors and officers insurance in place already, this is where I would say definitely put it into place, because it will cover actions from the regulator, costs in helping you to prepare for regulatory investigations, but it's only on sort of policies that are specifically designed for fintech. So just be aware and make sure you have that cover in place. So the other thing that I promised we would talk about was what perhaps clients and vendors are likely to insist on you having. But before we do that, I just want to talk briefly about challenges that specifically fintech businesses face when trying to arrange insurance. I was talking to Suzanne just before we went live on this about the fact that, that fintech is such a wide-reaching term now and encompasses so many different types of companies. So trying to drill down an exact definition is quite difficult. But if we sort of take it as the fact that you're either regulated or you are providing technology services to the financial services sector for the purposes of this. And unfortunately, insurance isn't the most dynamic of sectors, which is why insurtech is gathering some serious momentum, because it's just an industry that is so ripe for disruption. If you are a traditional financial services firm, it's quite easy to secure insurance coverage. Unbelievably, insurers are still struggling in the main to wrap their head around fintech, which is really frustrating. There are still only a handful of insurers that can actually provide a full, comprehensive solution for those in the sector. I won't bore you with all the details as to the intricacies of the insurance market, but essentially you kind of have insurers and underwriters within insurance companies that act on a really siloed basis. So you have underwriters that specialize in technology companies and underwriters that specialize in financial services, and they work completely separately. And there's only a few insurers out there that have thought, hang on, why don't we coordinate these teams together and create something which combines the two? So it's frustrating. It's getting better. There are some more options available, but I guess what I'm trying to say here is you need to make sure that you're speaking to these specialist insurers, not just to get cover for the regulated side of your business, if that's applicable, but the technology. So just to give you a quick example as to why that's so important, I'm going to talk you through what happened with a company that we worked with. There's a company who was providing a software platform to finance companies, and it allowed their client, the finance company, to process consumer credit loans. Now, it was brought to their attention that the system was not issuing the correct information on the paperwork that was being provided to the customers, nor at the correct frequency. And whilst this error wasn't detrimental per se to the customers, it did mean that the finance company, aka the client of our company, was using the software was in a technical breach of the Consumer Credit Act, and therefore had to repay all fees and interest to the affected customers at a cost of over £3 million. Now, the insurance responded by working with them to negotiate on a commercial settlement, which brought a resolution to the claim. And it also preserved our client's relationship, with their customer. So as well as providing tailored cover for fintech firms, there are some specialist fintech policies available, as I say, and they offer you the advantage of being able to effectively package up the insurances under one simple comprehensive policy. So typically you'll have professional indemnity, you'll have directors and officers liability, you'll have cyber liability, and you'll have crime. And I'll come on to cyber in a few moments into why that's so important. And it's good to have all of these covers on the one policy if you can with the same insurer, because there can be times where perhaps an incident would fall across several of those parts. So it just means that there's no gaps and no insurers arguing about who's going to have to pay. Now, unfortunately, you might think that it'd be really easy to sort these insurances out, but it's not always the case. So it's essential that you don't leave things to the last minute. In a few years' time, the advancements in insurtech might mean that, my job as a broker and certain underwriters are made redundant. But for the time being, it's still quite a manual process in terms of obtaining these quotes. If you were going to be regulated, I'd be very surprised if you'll be able to get cover directly online. Even if you can, or if you're not regulated, I would urge extreme caution at going direct to an insurer or doing anything online, because the covers can be quite limited. You're not getting any sort of advice. So the process of going via a broker, like myself, it's still very humanized. So we would sit down with you, talk through kind of your business, understand your risks so that we can best represent you to these specialist insurers. We have the experience in knowing the covers and the terms, the conditions, so we can guide you through. We can push back on certain things that they might try and put into the policy. And it really does come down to, I like to think of insurance as almost you're asking insurers to make a bet on whether something is going to go wrong with your business. So whether they want to take on that risk and at what terms and what premium they're going to apply in order to do that really depends on how they view your business. So they do kind of have certain rating models that help them come to their premiums, but there's still a lot of other things and factors to be taken into account that comes down to their own individual perception. So if anybody here has ever applied for a mortgage, you'll know about all the different paperwork, etc., that you have to complete and all the information to provide. And insurance is kind of similar. So the more information we can give to insurers to get them comfortable with your business and the fact that you understand what your risks are and what we can show to them, what you're doing to mitigate them, that will get them more comfortable. And that will ultimately result in you getting better terms. Price comparison sites may give the impression that insurers are all vying for our business, but unfortunately, it's not always the case. We're in quite a hard market cycle in the insurance world, which means that insurers are being really, really cautious about what new clients they take on. So it's really important to get them comfortable. So in terms of key triggers and rating factors that insurers look at, if you're involved with sort of retail clients, they see that as quite a high risk. Territories that you operate in, your revenue, your target market, the products you're actually working with, all form part of it. So as I say, the more information, the better. They'll usually ask for business plans and they'll want to see evidence of how you're funded and the fact that you have or will have sufficient working capital as you sort of grow through to profit stage. So this is why it's really, really important to talk to a specialist so that they can kind of preempt what insurers are going to ask so that their broker can represent you best and get you the best terms. So I'm just going to move on now to what clients and vendors will typically ask you to have in place, or certainly what we're seeing to be the case at the moment. Data, for sure, I'm sure for most of you, is probably the most valuable commodity that you hold. So cyber insurance for me is an absolute must-have. Some quite frightening statistics here. And unfortunately, smaller companies are often the target of cyber attacks because they're seen to be more vulnerable than larger corporations. You just don't hear about it as much in the press. Now, you are responsible, as I'm sure you know, for all of the data that you collect, regardless of whether it's outsourced in terms of the storage. So it's vital that you take measures to protect it. Not going to go into GDPR any great depth today because I'm sure everyone was fed up of talking about that. But as you can imagine, even if you outsource the storage of your data storage centers are really quite heavily targeted by criminals and they're not impenetrable. So cyber insurance really helps you manage your cyber risk as well as helping to minimize the impact if you do have any sort of attack or a data breach. And without insurance, any sort of attack or breach could have absolutely catastrophic consequences for your business, both in terms of, your finance and your reputation, particularly kind of when you're at that early scaling stage. Now, I'm sure in the fintech sector, you're probably more savvy than most when it comes to cybersecurity. And of course, everyone takes measures to protect their IT as best they can. But it doesn't mean that an attack or a data breach can't happen. Many cybersecurity breaches that we see are actually more often than not a result of some sort of human error or element involved, either simply a mistake or criminals exploiting human vulnerabilities to try and find a way into your systems. So just think of cyber insurance as basically your 999 emergency response in the event that you suffer from an attack or a breach. So you get access to an emergency number, which gets you through to a cyber breach coach, which is typically a law firm. And they will basically triage you and appoint the appropriate experts. Now, the cost...
Eloise, just as a result of the poll, again, the question was, have you got cyber insurance? Only 8% have got insurance in place. Yes, 8%. 92% have no insurance for cybersecurity risks yet.
Okay, well, that's very interesting. Thank you.
So it's a really important point what you're talking about.
It is. And I think, cyber is sort of really gained a lot more momentum with people taking it out in the last couple of years. I think before it was kind of seen as, another type of insurance and what's it actually going to do. But like I said, it is hugely important for every business now. Unless you can afford and you want to keep all these kind of experts on retainer, this is basically paying for a panel of experts that would assist you in the event of something going wrong. And if you ever do suffer a breach, it's so critical to respond quickly. So these emergency numbers are available 24 hours a day, 365 days a year. So as I say, you get put through to an expert who will triage you. So they will help you notify your customers, the regulator, any other relevant parties. They'll deploy IT forensics that will come in and help investigate the cause. They'll help you recover your data and to restore your systems. You'll get PR cover to help sort of manage the message to your customers and mitigate any damage to your reputation. And also the notification costs themselves in having to tell all your customers, perhaps you would need to set up an emergency call center to sort of deal with clients ringing and wanting to know what's going on. The costs of things like that are also covered. So it really is invaluable in terms of what that can give you. And that's kind of before you've, incurred any further costs. So perhaps your platform goes down, you cannot work, you have to unplug everything, or it's been blocked. You could lose out on income whilst that's all being sorted out. That's covered under the cyber. As I'm sure you can imagine, the most common type of claim and attack that we see now is ransomware. Somewhat controversially, the ransom costs that you would decide to pay potentially to release your data back are covered under a cyber insurance policy, as well as access to consultants who can help you decide. They might say, we've seen these guys before. If we pay them, you will get your data back, or if you do, you probably won't. So it's up to you. So it's just having that sort of support in the event of what would be a very scary and traumatic time. And also that's kind of before anybody's taken any action against you. So you might get clients try and sue you to say that you were negligent in how you looked after their data. And again, the policy will respond similar basis to the professional indemnity to cover the costs involved in defending that, and also any settlements that are ordered against you up to your limit of indemnity. So really, really valuable cover to have. Now, moving on from terrifying everyone about cyber attacks, given that this webinar is entitled Health Check, as with our own personal health, it's important to keep this up to date and to keep your insurances up to date as you grow and you scale and your business generally changes. So I wanted to kind of finish off by talking about some things just to consider as you grow on your journey. So, for instance, you might be going global, and many insurance policies as standard exclude any type of work in the US or Canada. And there are some other territories that cause concern to insurers. So it's really important to make sure that you check what the jurisdictional limits are on your policy, and just make sure that you've got cover for these new territories that you're going to be working with. Now, insurance policies work on the basis of what we call utmost good faith, which means that you're required not to withhold any information that could affect how insurers view your risk. Now, the vast majority of insurance contracts also contain additional conditions, which means that you're required to kind of keep them informed of any information, what we would call a material fact, on an ongoing basis throughout the policy period. I'll put some examples here of some typical things that you need to make sure that you declare. If in doubt, I always say declare it. And this is, again, where having a broker could be really, really useful, because, I get clients ring me up quite a lot and say, do I need to tell the insurer this? And sometimes I'll say no, sometimes I'll say yes. And we can make sure that we go to the insurer with the right information as well to help them sort of, not panic if it's something that we think they might not like. If you don't declare stuff, then it could mean that when you do come to make a claim under the policy, insurers can say that they're not going to pay it. So it's really, really important that you keep them up to date. Now, as I say, that was a bit of a whistle-stop tour through sort of some key things to consider. By no means a complete list, and every business is different. So I'm happy to have a chat with anybody afterwards. We have actually put together a guide for startups and scale-ups that kind of talks you through what things you should have and at what point. So I believe that Suzanne's going to send out some copies of that, and if anyone else would like a sort of follow-up on that, I'd be happy to speak to them.
Fantastic, Eloise. Great, really interesting. And I learned a lot just listening to you as well, and thinking, what does Fintech Circle need? And what our portfolio companies, what insurance policies do we need to add here? And again, to our audience, please feel free to post your questions on the Q&A tab, which is on the top right side of your screen. And we will come back and answer your questions, during the Q&A session now. And I can see already questions coming in, from our startups. Let me start maybe with the first question here, which is about what is the minimum insurance you would recommend a company takes out as a startup, and what else should they consider once they're scaling up?
Well, as I mentioned sort of at the start, legally, it's generally just employer's liability. Potentially as a regulatory piece, you need the professional indemnity. I would always say directors and officers insurance, just because when it comes to your own personal liability, really important to protect that. A startup, I understand that, capital is limited. So you kind of don't want to have to take out things that aren't necessary before you're properly trading. I'd say as you scale, and you start to get more employees, things like employment practice liability, which basically is coverage for any employment disputes. As you can imagine, I think, post-COVID, insurers are quite nervous around claims in that area, from kind of, furlough scheme, from potential discrimination claims for employers about employees being vaccinated. Is it safe to send people into the office? Is it not, et cetera, et cetera. So, and that's just that side of things. They also cover things like unfair dismissal, discrimination, all that kind of stuff. So I'd say that's definitely worthwhile. Crime insurance as well. Again, as you scale and you get more employees and it becomes harder to kind of monitor. So that covers the risk of either internal or external or external fraud. So that could be employee dishonesty, that could be acting on the back of fraudulent instructions from one of your clients, so perhaps wiring money to the wrong account. It covers the company's own loss in respect of that side of things.
Great, Eloise. Another question from Monica Pedro. Could you please tell me about some technology insurances which are there around artificial intelligence?
Okay. Very interesting. Yes, so insurers that focus on technology companies, and there are a lot more of those than focus on out-and-out fintech. There are a couple of specialist policies available at the moment. As you can imagine, it's still very much an evolving piece. The fact that insurers are still just getting to grips with fintech, which isn't exactly new, probably tells you all you need to know there. But yes, there are a couple of insurers who are focusing on that. And similar to fintech, there are some sort of packages. So generally speaking, it would cover professional indemnity and cyber insurance risk. And the policy would be sort of tailored to the needs of an AI company in terms of the way the insuring clauses work. So I'll be happy to have a sort of a conversation offline about that.
Yes, great. Another question by Michael. A lot of mental health challenges for founders as well as a startup company are depending on the founder. So how to reassure the investors, that the founder stays either, kind of that they, I guess you mentioned it about the key person insurance policy. That's probably what he relates to. But how can you protect, the risk that if something happens to the founding teams?
That's a really, really good question. I mean, key person isn't really designed to take into account mental health. I think there are some changes being made to those policies, but primarily they are life insurance policies, life and critical illness, where the company is a beneficiary. I think in terms of providing comfort to the investors, making sure that you've got some sort of employee benefits program in place. Obviously you have to have things like pension schemes now in place as a mandatory requirement, but a lot of sort of, getting things like private healthcare for your staff. And there are schemes available for kind of early stage companies. And with those, you tend to get a lot of sort of employee wellbeing and director wellbeing sort of add-ons to those, like mental health helplines, et cetera, et cetera. So I think, even if it's not via insurance, having some sort of employee wellbeing or wellness program would probably reflect really, really well.
Yes, good recommendation, Eloise. Another question from Natalie. Could you please tell us about the packages, for startups, and what would be the costs? So what would be the average amount per month it will cost for startups, to be insured?
Okay. Now, without wanting to sound like a really flaky insurance person, it's really hard to put an exact number on things just because, as I sort of touched upon, there are so many factors that are taken into consideration. It's not a case of if your revenue is this and this is your business activity, there's your premium. It just doesn't work like that. It will depend on, insurers will actually like to look at the experience of the individuals involved, for example. So similar to, it's almost like talking to an investor in a lot of ways. So often when I'm talking to insurers, we'll get copies of kind of the deck that's been used to investors, because insurers kind of want to see the same level of, of detail. What I would say is, again, it depends on what limit of indemnity you're looking for. So, if you want £1 million limit of indemnity, if you want 5 million, of course, that's going to impact the price as well. I would say if you're regulated, the minimum sort of premium for PI, D&O and cyber, probably looking at sort of, several thousands of pounds a year as opposed to hundreds is probably the best way to put that.
Yes, makes sense. Then we had another question. What does D&O stand for? And I think you responded to that. It's directors and officers.
Yes, although that's quite misleading when we say directors and officers, because it, as I mentioned, it doesn't just cover directors and officers. It will extend to include, senior employees when they're acting in a managerial capacity. If you're regulated, again, the definitions are slightly different. So it will cover sort of people in compliance functions as well. It will cover things like the SM senior managers and certification regime and claims that arise out of that. So yes, it's important to make sure that you're getting, strong cover there.
Yes, good point. Delphine asked, do you have a list of specialist insurance providers to consider, or do you include, I guess, all the specialist insurance providers in your search?
We know who writes fintech and who writes tech. So by far the leading insurer when it comes to fintech are a company called Markel. They were actually the first insurer to come out with a bespoke fintech policy wording, which a couple of others have sort of, taken on as well now. There are, I'd say, 5 strong fintech insurers. I'll say strong, I'd say there's 3 within those 5 that I would regularly go to. If you aren't regulated, it does open it up a little bit more. But yes, we kind of use our experience to know who to speak to and the best underwriters.
Right. Another question by Cherry Lablache. And Cherry asked, are there any insurance schemes to cover lawsuits against mis-selling or kind of behavior which you get criticized for?
So professional indemnity arguably could cover that. They work on a civil liability basis. So essentially, unless something is expressly excluded within the policy, then it's covered. They don't cover kind of, financial guarantees. So if you're saying to somebody, on the investment side, invest this and we'll guarantee you this return, claims relating to that aren't covered. But, if you are accused of mis-selling, then yes, I would suggest that your professional indemnity insurance would extend to cover that.
Right. Matt Isadi asks the question, in the event of deficiencies with the security policy, do we need to have a risk mitigation plan in place, or is it provided by the insurer?
Okay, so referring to cyber here, I would think, so IT security. Well, insurers are now, as I say, quite selective about what sort of new clients they take on board. So they will generally ask for a proposal form / application form to be completed on the cyber side, which goes into a lot of detail around your controls, your securities, your business continuity planning, etc., etc. And there are sort of standards on there that you can quite clearly see they're expecting you to have in place as a minimum. The answers will generally, that you'll be able to tell how they want you to answer. And if they're not comfortable with the information that you provide, or they don't believe that your security meets their minimum requirements, they quite simply won't provide terms until you get them up to date. So sometimes that can be a useful exercise because, I've had it in the past with clients where we've gone back to them with the insurer's comments. They've then implemented the changes, which was just good risk management for them anyway. And then we've managed to get them terms. Saying that, once you are a client, insurers do kind of tend to often add a lot of support services on board. So They will offer things like employee training as part of the policy coverage. They'll offer you access to risk managers for a small fee. So, you can get a lot of these kind of nice perks as well, which would help.
That's great. And what about since COVID? Did you see the increase of demand for cyber insurance policies?
Yeah, but we were sort of seeing that anyway, to be fair, over the last couple of years. I think people are starting to see the value. Unfortunately, there has been quite an increase in terms of cyber insurance premiums in the last couple of years also. But in insurers' defence, it's reasonable given the fact that there has been a huge increase in terms of both frequency and severity of claims, ransomware being by far the largest, as I've mentioned. And of course, working remotely presented a whole sort of new sets of challenges for companies and for insurers as well. So kind of the rates have increased in terms of increasing with the risk, I would say. But yes, it's certainly much more common for people to purchase cyber now.
Yes, no, I definitely can see that. And what are the consequences, Eloise? If people are not properly insured, what have you seen as not having the right policy in place? What can happen? What's the worst case scenario? What you've seen?
Well, it's unfortunate. I tend to sort of, either get involved at the point where something unfortunately has gone wrong for someone in the past, hence why they're coming to me for help, or before it's too late, which is it's obviously a better case scenario. I think it's more where I do tend to see, people getting things wrong and through no fault of their own is they're just not talking to the right people. So they spend ages and ages waiting for terms from somebody, but actually the broker or the insurer they're talking to doesn't really understand what they're doing or have the experience. So they don't really get anywhere. And if they do, they are either paying way too much or the cover just isn't right. So that's where we tend to see a lot of issues. And it's relatively easy to correct, and that's fine. Where I do sometimes see it is companies have either been sort of offered cover on a traditional financial services type policy that's more designed for, a bank or a stockbroker versus, the technology element, or sometimes they're on a technology policy, but it's not covering anything to do with financial services exposure that they have. So that's why it's really rare to get those policies. And it just can cause delays. And I think as well, it comes down to people being underinsured on, contractual requirements. So quite often, I'm working with a client at the moment who has a policy in place, but they've been asked to have certain covers in place as part of a contract they're tendering for. And half the cover just isn't there, or if it is, it's at a lower limit, and they just had no idea. And why would they? It's not, they've got enough to be focusing on. That's where if you have someone that's an advisor, they can just take care of all that for you. They sent me the contract. We've got the policy up to date as to where it needs to be.
Makes sense. And when we spoke about before, about investors, and lots of our fintech companies, of course, are on the fundraising journey, raising funds from angel investors, from VCs, and some of the investors, want a board seat and want to be a board member and non-executive director. And so you mentioned, the key requirement for having a D&O insurance policy in place, and what is a good one? How do you differentiate between good and bad ones?
Well, most of the directors and officers policies, the intent is broadly similar. So, it's always going to try and cover the same thing. And actually, the definitions of directors are generally pretty wide, and that's deliberate because you don't actually name the individuals on the policy. Insurers don't want to happen to be issue an updated version of the policy every time someone leaves, joins, etc., etc. So they're deliberately quite broad. I think in terms of bad ones that I've seen, particularly as a startup and fundraising, so a lot of companies at that stage aren't profitable just yet. And insurers get really nervous around the risk of insolvency because, unfortunately, as you can imagine, that's where you tend to get a lot of claims against individuals. And that's, again, why investors like to insist on this being in place, because people go after where the money is. So they were probably trying to hold them accountable. And a lot of directors and officers insurances will exclude the risk of insolvency if you're at pre-profit stage. We always make sure that we get that included, not because, obviously we're hoping it doesn't happen for our client, but by getting insurers comfortable about the fact that, look, there is funding, they've got working capital, here's their draft accounts, this is, what it's going to be used for, here's the business plan, this is how they're going to get to profit stage. They will, include insolvency cover. So that's important. And also, the regulatory side, if you are regulated and you're subject to perhaps, rulings on the financial ombudsman, make sure that's covered. and things like, the senior managers regime that you might be called under. Just make sure that it's actually tailored for your business.
Great, makes perfect sense. So Liz, we're coming to the end of our webinar. So maybe the final question, which probably is in people's minds, how to engage with you. What are the steps to get your help, and how to reach out to you? What would you recommend?
Well, as I said before, my job still isn't done by a robot just yet, and it might be in a few years' time, but it is very much a personalized process. So normally how it would work, I'll set up a call or in-person meeting if we are lucky enough to get the chance to do that, just to sit down, tell me about your business, tell me your story, tell me where you're trying to go, so that I can make sure that anything we build for you isn't just going to suit you for where your business is right now, that as you continue to grow, it's pointless taking out a policy, an annual policy, which they always are, if in 6 months' time, you're going to be trading in America, or you're going to be doing this, that, or the other, and then the policy isn't fit for purpose. So get a whole picture. I will then advise on kind of limits that I think you should have, what covers you should have now, what maybe we can think about down the line, depending on your budget, just give you that sort of bespoke advice, tell you what information we need, preempt a lot of the insurers' inevitable questions, so that when I go and talk to the insurer, I can negotiate for you in the best possible way. And we've already answered a lot of the questions that they would even have. We then negotiate with them. There might be a bit of back and forth. They might ask for some more information. We'll then present to you an option. We'll talk to you about who we've been to in the market, what our recommendation is and why. We'll talk you through all of the conditions and what the cover actually means and what you need to do if there's an issue. And then you can go and place, which makes it sound like a really long process. It's not always that painful. My job is to make it less painful for everybody, which I like to think I do. But I would say, don't leave it to the last minute. I know it's easier said than done when you've got loads going on, but you're going to put yourself in a much, much better position if you allow, I'd say, a good few weeks as a minimum, just to allow you time to get the information that's needed. We can then go and conduct a wider market review. We don't just have to go to one insurer. You've then got time to actually review everything and get it signed off. So if you need it really, really desperately, we can do it, but it's always in everyone's best interest to allow as much time as possible.
Yes. Good advice, Eloise. Thank you so much for sharing your expertise and your advice, with all our fintech companies. It was great to have you as part of our Fintech Circle webinars and insight series. And again, thank you to our audience for joining us all. It was lovely to have you and being so actively engaged with your questions as well today. This webinar will be available as a recorded webinar as well. So if you want to listen to it again, we will put it on the website for you to watch also on demand. So with that, I would like to thank you so much for joining us, Eloise, and for our guests for joining us. And I wish you all a lovely day and keep in touch.
Thank you so much for having me.
Thank you.
Take care.
Take care.
Bye.